Good morning, everybody. Happy March. Welcome to this new month. Ready to dive in and keep this hot year moving strong. All right, got it. Let's get all set up here. Get this camera focused in if we can. Hello, there we go. Beautiful. Now, I didn't actually throw this stream yet onto Instagram, so maybe I'll go and share that as people make their way in here. You guys gonna want to give it a few seconds, and I'll go throw this on the Instagram story. I know not everybody's used to the transition that we made, so I want to make sure I keep giving people that opportunity to just go straight from the Instagram story to this link. All right, let me go ahead and share. Awesome. Copy link. Good morning, Paul. Just taking the time to go post this on the Instagram story here. I know not everybody's used to us being over here yet, so I'm going to throw it on there. But at some point, it takes me a while to go ahead and post both times. I'm trying to work out in the morning. So at some point, everybody's just going to have to get used to popping into YouTube and tuning in. But for now, I'll make sure to post it on my Instagram story. Just taking a second to post this, and then we'll be ready to rock and roll. Awesome. Boom. We're in business. And I see a few of you guys have already made your way in here, right? At this point, I probably won't continue to just throw the link on my Instagram story. So all you have to do is come to YouTube, and if you follow me, if you're subscribed to me, then you'll see that I'm live on YouTube. So just come here, come to YouTube just like you came to Instagram every morning. And I'll be here going over the pre-market rundown, right? The news, notes, and mindset necessary to remain consistently profitable here throughout these crazy markets. So just make sure to come here, right? Don't even wait on the Instagram, because it takes me a little bit longer to set up for the YouTube live stream than it did the pre-market rundown. And as a result, I've been skipping my morning workout, but I had to get some pump in this morning, some morning work in. Just take down that note, right? Make sure that you're just coming here straight to YouTube. You don't have to go to my Instagram story first or anything. Just come straight here, and we'll dive into what we have going on in terms of this news here. If you're watching live or via replay, I already see everybody in here live is throwing the ones in here. Make sure you throw those ones in there, signifying your intention to get 1% better by the end of this session. I wish that this camera would zoom in and maybe get 1% better at the zoom that we have going on. There we go. Boom. Awesome. They love touting autofocus in 4K until it's time to autofocus and be in 4K. But anyways, right, we're here to get 1% better. That's the goal each and every day. Close the gap between where we are and where we're meant to be, making sure that we're constantly leveling up, refining the strategies, right? Making sure that, we're just fine-tuning things, fine-tuning our system, fine-tuning our mindset, so that regardless of what the market throws at us, right, we have something ready for it. But it takes a specific system and a specific mindset in order to do that, right? In order to move with markets, you got to throw all pride aside. You've got to throw all expectations aside, right? And you have to take what the market gives you and be prepared. So make sure you've got your rules, right? You know when you need to be using one strategy, when you need to be using another, right? And that you're honing those skills and remaining patient, right? Paytient, right? Remaining patient. You get paid when you are patient, when you think the market owes you something, or you're moving too much, you shouldn't be moving, right? It will come back to haunt you, right? It'll bite you in the butt, and the market will teach you that humility. So you can either learn it the easy way or learn it the hard way, right? But remaining patient and making sure that, you are kind of making sure that you're using the right strategies and applying things in the correct way is super, super important in this market game. So that's my little 2 cents before we dive into things that we got going on this morning. Hope everybody had a nice, restful, and restorative night's sleep and is ready to get into it. There we go. All right, cool. We're focused once more and is ready to get into things today. We don't have too much news, but still a few headlines that we need to go over. The top news being to forgive or not. So SOFI Technologies, ticker SOFI, rose as much as 4% in afternoon trading on Tuesday following reports that conservative justices were skeptically questioning President Biden's plan to forgive billions of dollars of student debt. SOFI is a known player for refinancing student loans, with Seeking Alpha contributors like Data Driven Investing recently pointing out that growth at its lending arm should accelerate again when the student loan moratorium expires in the back half of the year. Other related stocks were less affected by the opening arguments at SCOTUS, such as Navient, ticker NAVI, and Nelnet, ticker NNI, and SLM Corp, ticker SLM, which closed the session around the flat line. So in terms of snapshots, Chief Justice John Roberts led the conservative justices who comprise a majority of the court in examining whether the Biden administration has the authority to cancel federal student loans as a result of the COVID-19 emergency. Roberts, in his questioning of the White House's top Supreme Court lawyer, suggested that the administration had exceeded its authority. Roberts also contended that a program as large as Biden's student loan forgiveness program, which is estimated to cost $430 billion over 3 decades, should be something that casual observers would expect Congress to take up. If you're going to affect the obligations of that many Americans on a subject that's that great of controversy, they would think that's something for Congress to act on, he said. So it looks like the Supreme Court just doesn't want to play a part in it. They're like, look, take this to Congress, right? Take this partisan stuff, all this to Congress. They know that it's a hot topic. It's a touchy topic, right? Everybody who went ahead and paid off their student loans is going to be mad at the people who got them forgiven. The companies that make money off the student loans are going to be mad that they're forgiven. So it's a tough situation. It looks like the Supreme Court is saying, bro, why did you put this in our lap? In addition, let's see here. In addition to the debate over whether the Biden administration has the authority to forgive the debt, the court also must decide on whether the states and 2 individuals suing the government have the legal right or standing to sue. Let's see here. Parties generally have to prove that they would suffer financial harm from the action. The administration has said it's acting in accordance with the HEROES Act, a 2003 law that allows the Secretary of Education to waive or modify terms of federal student loans in connection with the national emergency. So that's pretty much how a lot of things get done, right? COVID allowed the government to do a lot of things, access a lot of money because it was declared a national emergency. It also allows them to do a lot of other stuff, right? Like try and cancel student loans. And that is something that they try to do. So they try to say, hey, it's emergency. In the state of an emergency, the executive branch has certain powers that it doesn't have at other times. So you could do things like, kind of circumvent Congress and forgive all student loan debt, right? Which you wouldn't normally be able to do. But because it was a state of emergency, Biden could do it. So let's see here. That law is primarily intended to protect service members from financial harm while they were serving in wars in Afghanistan and Iraq, right? So it's that classic, this law was created to do something else, but I'm going to use it to further my political agenda type of thing. In terms of outlook, the concept of student debt cancellation, even if it would pass through Congress, has divided the country. Some say it would benefit borrowers at a time of high inflation or lead to financial stability and economic security. Others have flagged it as another contributor to higher prices or an unfair measure for those that choose not to go to college because of the cost, don't have loans, or already paid them off. The Federal Reserve estimated that Americans owed $1.76 trillion in student loans for the 4th quarter of 2022. Wow. With the average student loan debt around $40,000 per borrower. That's crazy. Well, yeah, it's a crazy world. At the end of the day, it's tough. I don't have any student loan debt personally, but yeah, it's just a very, very tough situation. You do have people that didn't go to college because of the costs. So it's like, why should they have not gone to college instead of just adding, to the problem? I don't know. I'm not the president, right? But at the end of the day, I'm just here to talk about how that could affect stock tickers. And something they did have moving was SOFI yesterday afternoon. So in terms of whether or not, SOFI has the opportunity for a trade, you need to make sure that those technical analysis skills are on par, right? You need to be able to go in, look at SOFI's chart, do top-down analysis, and say, okay, based off of what I'm seeing on these different time frames, we've either got short-term, medium-term, or long-term opportunity, or none of them, right? If you can't look at, a chart and immediately kind of deduce that, then you need to make sure that you book a discovery call, right, at the Instagram link in bio. You need to make sure that you're figuring out what steps you need, right, whether it's taking in free content like the Candlestick, Beginner's Trading Bible, all those reels that I just dropped and put them on TikTok, put them here on YouTube as well. Using all of those resources, right, wherever you are. It doesn't matter if you have no money, you've got, $300,000 set aside just to learn. it doesn't matter, right? You got to start somewhere, and it's figuring out where you start and then putting your best foot forward. But hearing news it doesn't mean you go ahead and place a trade, right? A lot of news ends up being a sell the news type of thing, where it's buy the rumor, sell the news. Where there's a rumor that so and so is buying TikTok. You guys remember that? There's a rumor that Apple was buying TikTok, and then another company was buying TikTok. There's rumors that all these different companies are buying TikTok, and what happens is stock runs on the rumor, right? But then you have, the news, and when the news actually drops, like Tesla's investor day, right? That's normally what happens. Tesla will run up until the investor day. Then during the investor day, it drops. Same thing with a lot of Apple events. People think, oh, Apple's having an event. They show all this cool new stuff. Like Apple stock is going to go up. No. A lot of people were like, oh, hey, the hype is high. Let me go ahead and take my profit. So it's important to recognize that news alone is not reason to place a trade. You need to be able to see if that news is precipitating or causing some type of movement on the chart that lets you know, okay, since this chart is a representation of the battle between buyers and sellers, am I seeing that this news is something that shifted the tide of that battle? If I cannot say yes or no, then I have no business placing a trade, right? That's where you want to get to, not just where you're just throwing darts at a board, because that might work, right? You can go through a drive-through backward, and they'll probably serve you your food. Did you do it the right way? No. Were you successful? Yes. That's the tough thing about trading, is that you can do things the wrong way and still make money. People view making money as being successful in trading, and that's not the case, right? There are tons of people that accidentally made money, and unfortunately, it ruins them moving forward because they think that's the right way, right? That's why you want to go ahead and make sure that you're putting in those reps, putting in that practice, so that you know exactly why you made money and that you're executing that strategy the right way. Otherwise, yeah, you can go through the drive-through 5 times driving backward, thinking that, oh, that's just how things are done. Eventually, though, you're going to end up crashing, right? And it's one of those things where it's inevitable. You want to make sure you're doing things the right way, and learning how to read charts is part of that, not just playing the news. Now, in terms of more stock-related news, love them or leave them. Hedge funds and mutual funds are warming up to stocks after last year's sell-off, but exposure to equities is still historically low, according to Goldman's latest analyst. What that means is that not a lot of people have stocks, right, in terms of hedge funds, right? Hedge funds and mutual funds, yes, they're warming back up, but the amount of stocks they're holding is still historically low, right? So for everybody, who's like, okay, it's completely over, this is something that we talked about to start the year. We broke the weekly downtrend, which is a great bullish sign. But at the end of the day, the things that I've been talking about since January of this year, once again, right, you guys hear me talking about it in January, and you see it February and March, it starts to take place. Talking about the increase in defaults, right? The increase in delinquency on debt. People can't pay back their loans, right? All that stuff that I was talking about during January when we had that amazing run and nobody's thinking about it, right? Then February and March, they're like, oh, consumer debt is in all-time highs, right? You've got people's car payments at more than $1,000 a month, right? All that stuff that nobody wants to talk about when the market is green for a month. Then when it comes back, right, and we're down in February and, things start looking shaky, you don't want to wait until that happens to be thinking about that, right? That has to be fully factored into your plan from the beginning. So that way you're not caught off guard, and this is really all just part of your expectations. But in terms of stocks and equities, even though, these funds are warming up to stocks, you still got their exposure to it, meaning how many stocks they're holding, right? You still got that at historically low levels. So the firm looked at, this is Goldman, by the way, Goldman Sachs looked at 758 hedge funds with 2.3 trillion of gross equity positions, as well as 543 mutual funds with 2.4 trillion in assets under management at the start of 2023. Among the stocks they saw favored were Fiserv, FISV, Humana, HUM, and Wells Fargo, ticker WFC. And among those out of favor and even shorted were Dow companies Caterpillar, Walmart, and Disney. Looking at Wall Street market calls this week, JP Morgan's global team remains bearish on U.S. stocks, and Nomura recommends getting back to cash. So it looks like not a lot of people are buying this run. We'll see, kind of what ends up happening here. But if we end up going back to slip back beneath this weekly downtrend, right, we're right back in the bear's cave. That's why during the challenge, you got both the bullish market blueprint and the bearish market blueprint, because you could get some of both this year, right? You've got to be prepared for both. Now, in terms of trending news here, Tesla Investor Day, pay attention to Tesla shares after the bell as the EV leader holds its Investor Day at 4 p.m. Eastern Standard Time. So they did that literally right at market close. The third edition of Tesla's master plan, following part 1 in 2006 and part 2 in 2016, will be a major part of the event, which will likely detail the company's long-term expansion plans and a new gigafactory in Mexico. So other announcements could touch on Project Juniper, the Cybertruck, autonomous driving, energy storage initiatives, charging network, revenue potential, and the Tesla bot, right? Optimus. In other recent news, Tesla paused its FSD, full self-driving, beta rollout until a software update is available, though the stock's monster 90% year-to-date rally restored Elon Musk's status as the world's richest person, which I'm sure we all deeply cared about and were super, super invested in. In terms of financials here, consumer flop. Another high-profile investor day took place on Tuesday. Goldman Sachs CEO David Solomon took to the podium, but ended up getting some flack over the Wall Street stalwart's foray into the consumer arena. The business has resulted in billions of dollars in losses over the past few years, and Goldman is now exploring strategic alternatives for its platform solutions unit. It's also in the process of selling some loans in its Marcus Consumer Bank portfolio, as well as evaluating the sale of installment lending platform Green Sky. Solomon had sought to diversify Goldman's revenue stream away from traditional businesses like investment banking, but his lack of answers saw the stock dive by 4% by the end of his presentation. Sheesh, imagine giving a presentation at your work and literally the stock for your company is just taking a nosedive while you're presenting. Whew. Glad I'm not in that position. But yeah, I mean, basically, in order to turn that into layman's terms, Goldman Sachs CEO tried to diversify Goldman's, revenue streams by kind of like taking some stabs in the consumer arena. So messing around like lending to consumers and things like that. And it didn't really work out. Right. And that's really what he was taking heat for. So everybody was kind of saying, stick to your lane, stick to stick to traditional businesses and, investment banking. That's what you're good at. That's what we're investing in you for. Kind of stop foraying into the consumer realm because that's not you. That it's like that GIF. You're not that guy. They told David Solomon right to his face yesterday, you're not that guy. And Goldman Sachs stocks sold off because of it. Now, in terms of today's markets, we're looking pretty green across the board. In Asia, Japan up 0.3%, Hong Kong up 4.2%, up big in HK, China up 1%, India up 0.8%. We've got the footy in London at midday up 0.8%, Paris up 0.7%, Frankfurt up 0.6%, the Dow up 0.2%, so not that much, S&P up 0.3%, NASDAQ up 0.5%, crude oil down 1%, gold up 0.2%, Bitcoin up 1.8% to 23,784. Today's economic calendar, we got to remember the Fed speaking at 9 a.m. Kashkari, not really a mover. Knock on wood, we don't want him to become one, but that's really the one kind of big thing that's happening today that could cause some type of movement here in markets. So in terms of what else is happening, 10 trades to get 10% plus yields from S&P 500 stocks without market exposure. Target sets cautious tone as investors eye rocky retail setup. With earnings on tap, Salesforce, ticker CRM, hears from another activist investor. Uranium particles enriched to 83.7% found in Iran. China's fat, that's not good, right? Don't want Iran to have enriched uranium to make nukes. Paramount, ticker Para, P-A-R-A, set to turn down $3 billion offer for Showtime. Virgin Galactic, ticker Space, SPCE, confirms launch date of commercial space flight service. Widening losses in weak forecast seen at Norwegian Cruise Line. Rivian Automotive, ticker RIVN, slumps after production guidance disappoints. And then General Motors cuts jobs despite pledges to contrary. That's tough. When you come out and say you're not going to cut jobs, then you got to come back out and cut jobs. People aren't very happy, but they're just following the trend, right? The trend of what is working right now for these companies, and that trend is cutting jobs. So unfortunately, that's what ends up happening. That's what's best for stocks, and it's important to understand that, again, what is best for stocks is often nowhere near compared to what is best for people, right? So because stocks are running, and oftentimes that is for the detriment of people, right? Let's say that the Fed is not going to increase interest rates anymore. That's horrible for the economy, right? That is horrible for people. That's horrible for people because it allows inflation to remain and stay entrenched and just become an even bigger issue that lasts even longer, right? But at the same time, the market would love that, right? The market would absolutely soar. So a lot of times what's good for the market and what is good for the people is completely decoupled, right? And it's important to know that. But that kind of wraps us up here, right? For our pre-market rundown. It was a short one, but still information to be aware of here. We're going to have all eyes on, Tesla's Investor Day after hours. I'm sure we will come in, tomorrow morning with some crazy, developments in terms of stuff that they're working on. I'm sure we'll have more cringy clips of Musk dancing. But as always, right, if you got even one valuable piece of information from this session, just show love to the account, right? On YouTube, on Instagram, you see reels, you see these, posts, this content that I'm throwing out for free, right, each and every day. Take it in, like it, comment it, save, send it to other people, right? Friends don't let friends stay broke. So let's make sure that we are all ensuring our own financial vitality together, right? We're learning together, we're growing together. So just share this, right? Let's help grow this community so that we have more and more trained eyes on the market, bringing us bankable opportunities. But that'll wrap us up here for the Premarket Rundown on the first day of March. Listen, we're already into the third month of 2023. Are you closing the gap or not, right? Are you accomplishing your goals or not? If not, you need to make sure that you're taking the necessary action in order to do so, right? Because years go by quickly. 2022 flew past. 2023 will as well. You can use that to your advantage or to your disadvantage. But if you're with me, right, and you're trying to stay committed and close the gap, you can do that each and every day because we're in an environment where that's what we champion. So have a great rest of the day. Hope everybody enjoyed it. You definitely got 1% better. I'll see you back here tomorrow morning for our next Premarket Rundown. Have a good one.